You're listening to the Market Update with Moneyweb, brought to you by the Right Choice investment from Discovery Invest. This Investment Insights report is brought to you by BOE Private Clients, now with day-to-day banking for the fortunate few. BOE Private Clients, money never sleeps. Well, long-time listeners to this program will know the name of the next person who's up on the show tonight, and it's a real warm welcome to have Simon Marais, the chairman of Allan, back on the line. He's in the country again in Cape Town. How are you finding things in Australia, Simon?
Very similar to you, I must say. Market's probably fallen a bit more, though. It's the only difference.
Well, it's so good to have you on the show again to perhaps give us more of a global perspective on a lot of things going on in South Africa. But perhaps we can start off with an article I wrote today for the Moneyweb website, was taking what Warren Buffett said last Thursday. And it's interesting that for only the third time in his life, he's publicly come out and made a public statement on markets. In 1969, he said sell. In 1999, he said sell, particularly internet stocks. Today, or on Thursday last week, he wrote an op-ed in the New York Times saying time to buy shares. What do you think of that?
Look, I think shares generally are probably offering the best value. I mean, I guess almost by definition, the best value they have for many, many years. And you'll never hit the bottom exactly. So it may well be true. I think the real risk lie in earnings, and especially in South Africa. I mean, we've been pretty fortunate here. I think shares are not down as much as they are in many other parts of the world. And I think that's the shoe that still has to drop. I think earnings will probably go down way more than people ever imagine.
And if you have a look at the South African stock market, it hasn't fallen by anything like as much as, say, the US or even the UK.
No, that's right. Or Australia, for that matter. Now, look, it's probably partially due to a weak currency, but I think it also means, you know, we may have a bit more to go. But having said that, we're down a long way, and you know, nobody ever predicts the exact bottoms and the exact tops.
So you'd be nibbling on shares?
I'd start nibbling, and I'd look for things where, you know the business is secure. So it's unlikely to have a massive drop in earnings. Things I'd be careful about is, companies where the earnings might have got from 1 rand to 10 rand, and the share price may be down at 50 or something. Because, even though it may look like a 5 PE, earnings tend often to go back to their old lows or near their old lows, and that would be where the real risk would lie.
On a broader basis, Buffett warns that there's still a serious impact likely on the global economy. He's not predicting a depression, but some other people who should know these things are saying it's possible. How are you reading it?
I'm sure it's possible. We've had the biggest boom ever, and the bigger the boom, generally the bigger the bust. And so I think it's surely possible. But you have to remember the stock market will turn well before the economy. And I think the stock market turned in mid-1932. 1933 was the bottom of the Great Depression, and by that time the stock market was already up something like 40%.
That's a point Buffett made in his op-ed as well. Obviously, you read the same material. Simon, looking at the South African stock market, though, in a global context, are we particularly cheap, particularly expensive, or in line?
Well, I'd say probably in line. I really look at typical companies here. I think they're valued pretty much like companies globally, and you can also see it. I mean, companies like BHP or Anglo that are listed in the UK and where the prices are probably made in the UK, I think looks pretty much in line with the companies we've got here.
So if one were to take Warren Buffett's advice and perhaps your advice and start nibbling on shares now in anticipation of the market rising at some time in future, you can do so in South Africa in the same way as you would be doing in the US?
Yeah, I think so, and I think the only thing I would be very careful is, I think the economy here has also been through a big boom, and I'd still be wary of things that are very sensitive to the economy, because I think those earnings have only come down a little bit, and then they probably have a much further way to go. Something
that's really been hit in South Africa is the banking sector. Today, Trevor Manuel in his mini-budget said that South African banks are shielded by exchange control and strong regulation. Are our banks, though, reflecting reality when they back at prices that we haven't seen for many years?
Look, if you've seen what happened to banks overseas, they're down a lot more. So I think our banks have been relatively strong. And yeah, look, I think the future could actually be very good for banks, because I think what happens is in time of crisis like this, you really weed the competition, and you get mergers and acquisitions worldwide. So, you may not be at the bottom for banks, but actually the next 10 years could be a lot better than the last 10, simply because the competition has been much reduced.
So is that where you'd be targeting your attention?
Look, probably. I mean, it could still be a bit early, but I think banks would be interesting. I think stable businesses that, where probably earnings are not linked to the economic cycle. Those often be companies where the earnings probably haven't gone up much for the last 5 or 6 years, simply because it's stable businesses, but where you buy them on low multiples. I think those would be good things to go for.
Simon, a lot of people are panicking. A lot of individuals have been selling their unit trusts, cashing in their retirements. It seems like a silly thing to be doing when the market's already fallen this far.
Look, it always is. You should always sell when you're up a lot, and actually when you feel great about the stock market. That's probably what you should sell. And when things are down a lot, there's doom and gloom. Everybody else is selling. You shouldn't be doing that. Now, I'm not saying you should be buying. You probably should be nibbling, but you certainly shouldn't be selling.
Simon Marais is the chairman of Allan, and a real pleasure to have him back on the program. We will be talking to him more often in future.